Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on July 25th, almost August. Since I did the video a couple weeks ago, not that much has changed. You have the indexes that are just in a firm uptrend, but kind of levitating, not a ton of power there as we kind of roll into the key kind of chunk of earnings season. And I would say you have more stocks, especially on the growth side of things, that I wouldn't say there's been a lot of abnormal action at all. They've just kind of been marking time. And sometimes, it's always a little bit of, I don't want to say yellow flag, but it's a little bit of something you notice, because if the market's doing, or the indexes are doing this and the stock isn't participating, the question is, hey, what happens if the indexes pull back 3 or 4%, which is going to happen at some point, right? But we'll see how it goes. Ideally, a lot of these names, especially in growth land, these could be nice launching pads that they gap up on earnings, and you say, wow, this is just breaking out of a 2-month rest period after a huge comeback, from the April lows, say in April and May. But we'll just have to see how it plays out. Overall, the vast majority of evidence is bullish, especially when looking at the bigger picture. The odds still favor where, 3.5 months into something that should quote unquote should be, a 12 to 18-month advance or something like that. We'll see how it goes, but that's just given all the pattern of the evidence, okay? But right here, at least on the growth side of things, we've pulled in our horns a bit, mainly just by, raising mental stops. We've sold a piece of one, got rid of a couple laggards, did a little bit of buying, but we're about 30% cash, which I'm viewing a little bit as cushion in case we do pull back, whether it's growth stocks or the market as a whole, but also as buying power. Like I said, if some of these either fresher new names just really gap up on earnings, or some of these names that really were a house of fire in April and May, but have mostly sat around since then, and maybe they react well to earnings and kickstart a new advance. So overall bullish, certainly leaning bullish, but pulled in our horns a little bit, and we'll see how earnings season goes here the next 2 or 3 weeks. Okay, let's hop into the charts as usual. I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. Like I said, there's nothing really new the last couple of weeks in the market when you're looking at the indexes. This is the NASDAQ. It's just kind of gliding higher here. If anything, it's a little quiet. You know what I mean? There's been a little speculation, some meme stock activity that, just makes you wonder. But at this point, we're going to have a pullback at some point. But either way, right now, there's still plenty of daylight there. It's the same story. The big cap indexes look great. This is the S&P 500 hitting new highs most days after a little bit of a rest here earlier in the month. And when you just kind of cycle through like the New York Composite, not quite as strong, but certainly clearly an intermediate term uptrend, sitting at new highs. The broader index, small caps, mid caps, not as strong. This is small caps, still lagging. You can see the relative performance line, this blue line, just kind of almost tickling new lows. At the same time, still above the 25-day line, mid caps. S&P mid caps a little bit stronger. So everything's in an uptrend. Everything looks pretty good. Even if you're looking at this is the equal weight S&P 500, same sort of thing. So everything's in an uptrend. Now we're not, if we pull back 3%, maybe the intermediate term trend, easy for me to say, would be kind of on the fence. So we'll see if this, you just want to play through some scenarios if that happens. But clearly, at this point, the trends are pretty strong, both intermediate and longer term. Moreover, you're still seeing something I wrote about in this week's issues. This is XLI. So this is industrial stocks, not my cup of tea necessarily, but very strong, kind of a risk-on sector. This is metals and mining. Some of this is gold. Some of it's going to be probably nuclear. I'm not exactly sure what's in there, but you can see just a nice accelerating upside. And then by comparison, XLP just kind of, it's not horrible, but it's just dead as a doornail, right? Going sideways. XLV, which is kind of, there's a little bit of growth stuff in there, but basically defensive healthcare, big cap stuff, just kind of range bound while the indexes are going up. So even though some things have stalled out, even though there's been some bouts of rotation we had talked about before, and even though we have earnings season coming up and all this sort of thing, the big investors, they might be going to different places, or they might be taking profits here and going there, but they're not looking for, at least it doesn't look like they're looking for a ton of safety just yet, okay? Now, in terms of what I was saying earlier at the outset about some of the names that were either, small, medium, big cap leaders have stalled out or started to correct, you know what I mean? Even though the indexes are kind of doing what they do. This is Dave, it's a financial, it's very thin, it had a huge run, you can see. So I'm not saying longer term it's abnormal, but you can see it kicked off on earnings, had a giant run. This one in like Sezzle, I think, SEZL, were very, just kind of these sort of small caps that just went wild on the upside. And now you can see clearly it's a short-term character change. I'm not saying they can't go a lot higher over time. I'm just saying for the here and now, they were going up, in step faster than, but in step that with the indexes now they're not. Okay. A Spotify, which isn't the earliest stage thing on the planet. It's had a huge run in the past year, but you can see this month it's been kind of sagging. Axon, we had this in the portfolio and got out a couple weeks ago. So again, it's not the end of the world. It's not like it's, you're not going to say this correction is, the stock it's toast. But, all these still have earnings in a week or two. But, you can just see this is certainly doing this while the indexes have been kind of just doing that every day. VEEV was one we had mentioned before. Again, I don't want to say speculative, but, a hot potato for sure. So again, I'm not saying like, hey, it's done for. In fact, maybe it's near, a short-term low or something. But you can just see it's kind of unraveled here, sort of doing this while the indexes are going up. So you're just seeing more of that type of action. I'm showing you some that have pulled back. There's others that like, a Cloudflare, which I think looks pretty good, by the way. NET, it's almost hitting a new high today. But you can just see this month, while the indexes have been kind of doing this almost every day, stuff like this has been chopping sideways. So there's more of that. We'll see if this is just a pause that refreshes. Maybe there's a big rotation back into growth stuff and into some of these growth things that have been sitting around and out of whatever cyclicals or whatever they've been buying, stuff like that. But we'll see how it plays out. Just it's becoming more and more, it has become more and more selective. We'll see if that continues, okay? In terms of individual names, some some are newer. Oracle, I continue to, it's completely not my normal type of stock, but it just, to me, it just got going. I'm going to 1, 2, 3, 4, 5, 6, 7. Sorry about that. But 7 weeks ago, I should have done that beforehand. So it's not like it's just been, yes, it started running from April low, but the breakout wasn't like last April, May, or this April, May, I should say. It just happened a few weeks ago. So it seems a little fresher, and it just seems like it could be a magnet for institutional money. It could easily pull back some, but so far it hasn't really bothered. Wanted to. Coinbase, it's hectic. Again, it had just broke out here, had a big run on sort of the stable coin. The news is good in the space, and it's kind of obvious, the stable coin legislation and Bitcoin hit a new high recently, stuff like that, right? So it's starting to exhale here. This is COIN, Coinbase. It's, if you buy something like this, you got to use a loose leash, but this is at least starting something where, maybe a week or two from now, it can calm down. This does have earnings on July 31st next week, so that will obviously impact things. Although, usually it's it'll impact things, but the stock is basically a bull market stock for crypto, so it tends to look ahead in terms of what crypto looks like this quarter and next quarter sort of thing. So could be approaching an interesting buy point. Cybersecurity coming out of the gate. This is Zscaler. Was definitely probably one of the 2 or 3 strongest, or at least best positioned like growth areas. Aerospace was really good back then. It still is. But so Zscaler was definitely a leader out of here, and you can just see it's had a huge run here. And it's just, again, this is another example where it just kind of really didn't do anything for a while, which is fine. Then it kind of, I don't want to say broke down, but, it's been slipping. This, to me, looks like a potential resumption play. I'm not going to give you specific levels, but, it looks like it's had a huge run. It pulled back normally. It's kind of toying with a 50-day line. Big picture, it's nothing bad. If it came down here, maybe it's something bad. But this would be something where maybe you get a resumption somewhere up here and you have a stop somewhere down there. It's a pretty good risk reward in a stock that, at least to this point, has clearly been a leader in the market. Okay, VEEV software hasn't been really where it's at, but Viva Systems, it's not going to be your fastest horse, but big gap, kind of a change in character, I think, out of this big consolidation. And then just it's been so tight in here. So, again, I look at some of these and you're like, well, it hasn't been going up. You can see the RP line's been sagging some. It hasn't been going up with the market. So it could be a negative, right? Maybe this is a top and it comes back down or whatever. But it doesn't have earnings for another month or so. But overall, to me, when I look at the pattern, it just looks like a very tight thing. Maybe it's still under accumulation and they just haven't really let it loose on the upside. Either way, Viva looks pretty good to me. There's a lot more kind of traditional bull market stocks that are acting well. This is BlackRock. It's $1,100 stock. It's a big company, but you can just see it's obviously a investment management firm. Nice and tight here. It's been breaking out. Nice volume on earnings. Schwab. Again, this is sort of on the bigger side, but this was one that we flagged early on, really hitting new highs right out of the market correction, which is pretty impressive. And again, it kind of didn't do anything for a while and kind of started to get going, but now it's starting to accelerate a little bit on earnings, maybe on pullbacks there. Interactive brokers. This one had a huge, run in the last cycle, and then a big correction this year, which kind of reset the advance. We'll see how it goes. But you can see, again, just a nice tight zone in here, and then it broke out with the market a few weeks ago, reacted pretty well to earnings. So just more and more even like a Blackstone, which is more obviously private equity and real estate, stuff like that. It's not out to new highs here, but you can see it's kind of changed character late last month. It's been in a steep uptrend, reacted well to earnings. So a lot more of those are looking pretty good. Shopify, they got earnings 2 weeks. Yeah, August 6th, a couple of weeks. But this one I just keeping an eye on. I continue to keep an eye on. This breakout right here was on really, really big volume that day, which is kind of a clue. Doesn't mean it's enough to resist the market. Obviously, it got pulled back down, but it's kind of been setting up here, tariff fears and all that. It seems like it wants to have another run. It's starting to poke higher now. United Rentals, we mentioned industrials earlier, just kind of like your ultimate cyclical type play. I mean, great, huge earning. Again, it's a higher price stock, but huge earnings, $43 per share in earnings this year. A long period of really no net progress, but seems to have changed character in recent weeks and reacted well to earnings this week. Just a few, it's not hard to find stocks. This is Curtiss-Wright. Not that they're all like traditional growth stocks, but this one's in the aerospace field. Again, a little higher price, but you can just see this, very persistent smoke up a chimney type of advance. And then on the weekly chart, it's kind of like, wait, what is that? It's just very, very tight in there. Whoops. There we go. It's very tight in there, which is a good sign. They do have earnings again on August 6th coming up, but just a nice pattern if it can kind of resume higher. And just a couple things to flag as I record this. So this is Comfort Systems, which sounds like a furniture company, but it's really actually infrastructure for data centers and some of that stuff or whatever. And some air conditioning, but it's been playing into sort of the tech boom. So you can see it's had a huge run, big reset here, and then just kind of, very unusual this year with these things that fall 50% or whatever, and then come kind of right back. That's not the normal thing, but it has worked this year. And gapping up here on earnings, you can decide what to do with it. I'm just sort of flagging it to say, hey, maybe it consolidates in here, pulls back, whatever. And then another one to flag is we've just seen more strength among just housing-related names. Maybe the Fed's going to cut rates. Treasury rates seem well controlled. I guess the deficit's down this year if people care about that. I don't know if they do or not. But this is Zillow, okay, symbol Z. And it's done okay here. It's had, it's had its moments here in the last couple of years where it looks like it's getting going. And sometimes it did get going, but never really had a big sustained advance for 3, 4, 5, 6 months. But this is kind of a nice looking structure. It's starting to pop up here. They do have earnings coming up. Again, I guess August 6th is going to be a busy day. So just rounding out a launching pad. And this could be one of these things that maybe gets, I say rotated into, but just bought if results are good, if the Fed's going to cut rates, that sort of thing. So back to the market, I would just say a lot of the things, we're 3.5 months from the low, give or take. And that is kind of a normal time for the market to exhale, have its first, quote, real pullback. Doesn't mean it has to happen. Maybe it happens underneath the surface. Maybe that's what we're witnessing. But overall, looks very good. I would just say make sure you keep your feet on the ground and have a plan. It's when the market's quiet and things are generally kind of moving up a little bit each day, I'm all for it, don't get me wrong. But the market has a way of, volatility contracts and then expands and contracts and expands. And I'm not saying we're going to get anything like this, where the market's fallen, 5-6% a day. But it wouldn't surprise me if we did start to see some bad news or some inflation report or some oil price spike or whatever, something that the market could latch on to pull back, shake the tree a little bit. So just make sure, I'm not saying go sell your stocks. I'm just saying make sure try to get some good entries, partial profits on the way up, trail your stops if the stock's working well, and go from there. But like I said at the outset, the vast majority of evidence is bullish, especially looking out many months. So we remain bullish as well. Okay, that's all the time I have for today. Thanks for listening. Be sure to come by again next week for another Cabot Weekly Review. And if you're interested at all in Cabot Growth Investor, we do have a special for new subscribers running. I believe it's $79 for the first year. You can learn more at cabotwealth.com. I think the link here on the final slide.